Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio, we have Michael Normyle, chief U.S. economist at Nasdaq. We're going to discuss if the Fed perhaps has made its last hike. Michael, it's great to see you as always. Welcome back to Trade Talks. And really, that's what the question is: if the Fed is, do we anticipate any more hikes? The language didn't change that much.
Right. Well, it does seem like the Fed, being the Fed, they have to do everything in their kind of Fed speak way. So you have to read between the lines a little bit, but it does seem like we are finally at that stopping point. It's being called a hawkish pause because they left the door open to another rate hike if necessary, but it seems the bias now is towards doing nothing over doing something. So they would really need some compelling data to push them to go further at this point.
How did the markets react to it?
Well, they seemed a little disappointed because it was that kind of hawkish pause instead of a more, clear signal that we're done here, and so we're just going to leave things all set. Just leaving the door open a little bit did lead to a little bit of a sell-off yesterday, and so I think the major equity indices are down about 1% to 2% over the last week. But it wasn't just what the Fed was doing yesterday too. So
yeah, I mean, you have a bank failure day after day. That's going to put some stress into the system as well.
Mm-hmm. Yeah. So of course, with the sale earlier this week of First Republic, there's been some concern that the banking crisis is kind of renewed a little bit. So we have seen some banks seeing bigger sell-offs, but like even just the regional banking ETF is down about 15% this week. So there's definitely renewed concern there after it had been kind of flatlining a little bit for a couple weeks. It's now taken another leg down.
Let's talk about earnings for a moment. They've been decent, and they've kind of been going under the radar here. Again, macro really is at the forefront of everything investors are looking at.
Right. Actually, yeah, I think decent is maybe even underselling it a little bit. I think if you look back 2 weeks ago, we were on track for negative 6% earnings growth, and with the beats that we've had in recent weeks, it's on track for negative 2.8%. So still negative, but a lot better than we were tracking a couple weeks ago. And you're seeing, profit margins seem to be kind of stabilizing here. So between the Fed rate hikes coming out of the system and some positive developments in earnings, that might remove two headwinds that stocks have been dealing with for the last year and a half.
To wrap up here, I just want to go back to the banking stress for a moment here. It doesn't seem like it's idiosyncratic as perhaps we might have thought when it's just Silicon Valley Bank and Signature Bank. When you start to see these regional banks one by one go under, these are the ones that have that local community relationship that lend to the small and mid-sized businesses. And we know how much of a chunk they employ people in the US. I mean, that's when you start thinking about what does this mean to the economy if they can't keep their businesses afloat and they can't pay their employees. And then you start thinking about unemployment and less consumer discretionary spend. I mean, that almost seems as big of a deal as these banks going down.
Right, it is a big concern because small businesses, they employ about half of Americans. And so if they aren't able to get the funding that they had been getting as easily, that could mean you're not expanding your business, so you're not hiring new people, or even just getting loans to make payroll and stuff like that could result in layoffs. So hopefully this is a little bit of speculation that's driving some of the sell-offs that we're seeing recently, more so than reasons for this to be a concern, because you have seen banks coming out and trying to reassure the investors that their deposits have stabilized. And we have seen that on a macro level. If you look at the data from the Fed, that small bank deposits have actually come off the low point from March. So there has been some signs of stabilization, at least.
All right. Appreciate the insight as always, Michael. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.